Welcome and thank you for joining this webinar hosted by RICS World Built Environment Forum, the webinar series. Today's topic is socially responsible investing. Now, I'm informed that impact investment for 2023 stood at 1.2 trillion, a decent number, I'm sure you'd agree. I'd like to say reliably informed. I think that's what you'd normally say when you deliver the exciting hook at the start of a panel discussion, but how reliable is that figure? What even is impact investment? Who's doing it? Who's benefiting? How is impact measured and reported in such a way as to be useful? How's it balanced against financial return? Is impact investment impacted by current economic headwinds? And indeed, is impact investment part of a wider mega trend, let's call it conscious capitalism, that could help address society's intractable challenges? I'm Charlie Barda, member of RICS since 2006, and since then, alongside development management work, I've looked closely at impact investment with a focus on residential for middle income earners, and I'm excited to be joined today by two leading voices in impact investment. Pete Gladwell of L&G, honorary professor at UCL and a fellow of the Royal Society of the Arts, an illustrious CV, and Vivienne King of the Good Economy with an equally illustrious CV working on affordable housing in central London, also looking at how to rejuvenate high streets as part of the Shopkeepers Alliance. I'm excited to be part of this panel today. They are our panel. Let's get them to introduce themselves before we get into the meat of today's webinar. Pete.
Thank you, Charlie. Yeah, that's a very, very kind introduction. So yeah, I do a bit of work with people at UCL, but my day job, as you've alluded to, is working for Legal & General in the role of Group Social Impact and Investment Director. So the team and I effectively work across the different pools of capital within Legal & General, and our job is really to identify where there's a need for investment in society, and then the right pools of money, and it's often combinations of money within Legal & General's 1.1 trillion pounds to meet that social need for investment. So that means in reality we end up doing a lot of work with local communities, universities, local authorities, government, and really understanding what the need is, and then, as I say, a lot of work actually internally with colleagues to structure investments to meet that need, and obviously meet the commitments Legal & General has to about 8 million people's pensions and savings that we steward.
Massively significant. Vivienne, over to you.
Thank you, Charlie. Hello, everybody. Great to be here. So my name is Vivienne King. I am head of real estate social impact at the Good Economy. The Good Economy is a leading impact advisory firm, and we're working with institutions, with enterprises, with foundations to help support their pathways to sustainable development. So we carry out a variety of services from impact measurement and management and strategy design through to assurance that standards are being met. And we're also leading an initiative which we've developed called place-based impact investing, which is very much about looking to create collaborations for improving the way in which we can all contribute to the lived experience for people. So great to be here, and looking forward to the conversation.
Fantastic, thank you very, very much. Yeah, I think I'm pretty sure we're going to come back to that place-based impact investing matter probably several times. Worth mentioning that we have over 400 registrations from over 50 countries for this webinar. It's very exciting. I'm reliably informed by RICS that that's one of the bigger numbers they have registered. So I guess that's a reflection of how relevant this is, and maybe something indeed of a mega trend. Definitely interested to see different perspectives from different parts of our country and from other countries as well. You will see there is a chat box. Do please submit questions to the panel. It really helps bring the conversation to life. And if you're new to these webinars, yes, as I say, the chat box is on the right of your screen, and we'll pick up as many of those questions as we can as we go through the session. So, question number one: What are the initial steps when considering an impact investment? Pete, I know you've talked about your screening process when you're looking at different investments. Do you want to kick off on that? And perhaps let's start with, how do you define impact investment and what are your priorities?
Yeah, thank you. Thanks, Charlie. I mean, so it's worth saying, you mentioned a figure at the start about the amount of impact investment. We very explicitly in Legal and General Capital, so that's the Legal and General's own balance sheet investment, don't marginalize impact as one pool of capital that sits to one side and have an impact investment pool of capital and a mainstream pool of capital. We're very clear that we think impact investing, and we'll come on to talk about what that means, actually generates better long-term risk-adjusted returns as well. So every investment that L&G Capital makes goes through an impact assessment process. Where that starts is effectively, as I mentioned earlier, really understanding what's the social or environmental need for investment. And that could be anything from a heat pump manufacturer such as Kenza Heat Pumps in Cornwall, with whom we've invested twice now, a heat pump manufacturer needing additional capital to grow, all the way through to huge regeneration schemes that will fundamentally change the shape of a city, where local authorities, local communities have said, look, we've got some really great knowledge economy bubbling up here, but it needs the space, it needs that kind of incubation system to be able to really develop and create the economic growth and the jobs that could be unlocked. So there's a huge different array of what that could look like, but the most important thing to communicate is it starts for us with understanding that social need for investment. And then we're mapped through a process of really looking at what are the key elements where this will have an impact, this investment will make a difference. As I mentioned, that could be climate and nature, that could be health, well-being, quality of life, it could be inclusive economy. Ideally, it's all three, but what we're really trying to drive there is a clear understanding of what impact it will have, who will be impacted by this investment, how much impact we will make. You know, is it just going to be marginal or is it going to be really significant? A slightly techie bit important one, what's the difference that L&G Capital's investment will make? Because there may be other pots of money like government grant that are delivering large amounts of the impact. So it's important with integrity to acknowledge that. And then also really importantly, but this is a bit more mainstream, are there any significant ESG risks? So are there any downside risks that we need to be aware of as well? So it's looking at that, which sectors are being positively affected, which of our impact themes, climate, health, well-being, inclusive economy, and then assessing the what, the who, how much, contribution and risk as part of those three themes. And that, when an investment then goes to investment committee, means we can be really clear on intentionally what impact is this investment going to drive, how is it going to improve people's lives, how is it going to change their community, and how is it going to, what environmental impact will that have as well?
Super helpful. Vivienne, your thoughts?
Yeah, just to come in there, and absolutely, and it's terrific to hear Pete talking about where L&G Capital are and how far advanced you are, and Pete was actually talking there through what we call 5 dimensions of impact, which is one of the standards that sort of mature investors in impact are actually adopting, and it's something that we very heavily promote. And so the sort of impact investing is defined as investment with the intention to create positive, measurable social and environmental benefit alongside a financial return. So as Pete says, it's very much integrated into the sort of standard financially orientated approach to business delivery, and that's very much what we try to achieve. This isn't an add-on. This isn't this isn't part of philanthropy that you might have that sits quite separately to business delivery. It really has to become a business imperative, and so a place to start is very much the intention to do that. And quite often, people are put off because either they feel that it's going to be an enormous challenge. Well, it's not easy, but it's going to be an overwhelming challenge that it's very difficult to define because it's intangible, and that it is going to detract from their performance. And so therefore, it isn't something they need or want to get involved with. And I'm sure we'll move on to this, but we are seeing sort of impact investing really moving from the sort of periphery very much sort of set centre stage now. And so, you know, increasingly the feeling is that you need to be involved in this at some level, really, in order to be future-proofing your investments, which is tremendous change.
Fantastic. And I think that point you mentioned about, you know, will impact, or a focus on impact, detract from performance, is clearly something that I think a lot of people will be thinking about, but is answered in a sense by what Pete was saying when all LNG's investments are screened for impact. You know, I think we'll definitely come on to that in more detail. What are the processes for evaluating and measuring impact investments? So to evaluating and measuring, I would add reporting, which is, I think, critical for accountability, to show an investment is actually making the intended impact and can be interrogated as robustly as financial performance. Now, there are potentially confusing range of reporting standards certainly in environmental impact, which I'm sure many of the audience will be familiar with, BREEAM and EPC and neighbours, while the famous B Corp has met with some criticism perhaps for maybe slightly vague standards and questionable members. Maybe this lack of clarity in reporting and measuring is one of the main challenges in getting wider take-up of investment, of impact investment. Pete, Vivienne, what are the methodologies you deploy? What role does data and tech play in measurement? And how do you define a successful investment?
Well, if I perhaps kick off with that, yeah, the sort of alphabet soup doesn't help, certainly, and lack of standardization doesn't help. But at the Good Economy, we adopt an approach which is very much based around a theory of change. So what are the outcomes you're looking to achieve? And Pete was referring to quality of life and health and so on. What are the outcomes you're looking to achieve, and what in your organization, what in your business can you actually materially impact in doing that? And between what you do and those outcomes, which logically you should drive, you can't take sole credit for them, but logically you drive, you need to have a business process, just as you would for any other aspect of your business. And that very much needs to be grounded in KPIs and indicators, in targets that you're setting for yourself, potentially thresholds, so that these are the things that you take into account, as Pete was saying, when you're screening. Now, those metrics and KPIs, they can be a combination of quantitative, so they can be number orientated, and I'm not saying here that they should be, we're not necessarily talking about monetization, but they are quantifiable, and they can be drawn from published indices. So you've got various, you've got the Thriving Places Index, you've got the Levelling Up Fund Index, you've got the Index of Multiple Deprivation. These are published. There's a recognized credible indices that you can use to set your baseline in your place and to identify change over time as you're investing through your impact strategy in order to improve the lived experience in relation to those outcomes. So that's a very important aspect of what you do. Another part which we must never forget, and we will come on to community engagement subsequently, is the qualitative aspect of what you change. And much of that comes from the conversations that you need to have with people, because fundamentally you've got to actually be speaking to people on the ground to understand whether or not you're making a difference on the ground. So these quantitative and qualitative metrics are a very important part of a credible measurement and management system. And these are what you drive through your investment committee, through your due diligence, and these are the expectations that your governing bodies need to have of you when you're bringing an investment forward for approval. And then just as you report annually on your overall performance, you need to report annually on your impact performance as well. And just as you bring in auditors for your annual report, you need to bring in an independent assessor to give the commentary, the assessment in relation to how you have performed. So both are really important for transparency, and transparency has really sort of kicked up end of last year, beginning of this, with new regulation that's come in, which we might come on to.
Yeah, thank you. Pete?
I think, yeah, the only thing I'd just add to what Vivienne said is, firstly, you know, just to give the Good Economy where she works a free plug. I mean, but joking aside, it is really important to acknowledge that if you take your impact as seriously as your financial returns, you know, you wouldn't dream of making a property investment without engaging some kind of advisors, whether it's a CBRE or a Savills or a JLL or whomever it might be. So there is a genuine, whether it's Good Economy or, you know, people like Hillbreak, others are available. My point is, it's worth investing time and money into getting advisors who can help talk you through some of this process. And, you know, people like the Good Economy are fantastic at doing that. The second one, it gets really easy to focus on the initial investment or the initial development. Actually, you know, it's just as much about thinking through your leasing strategy, or even at L&G, we've done a huge amount of work around how we pay our cleaners and our security guards a fair wage and address safe sick pay, for example. You know, that's, if we're talking about real estate being a force for good in people's lives, which is at the end of the day what we're trying to drive through this, it's not like you just make the initial investment, take that through investment committee and then switch off. And so a lot of the work we've done around that kind of place-based impact is actually thinking through every point we as an investor have a chance to intervene in this community and in this building's life cycle. How are we going to maximize the impact that we drive through that?
That's super interesting. I mean, certainly from my point of view, we've alluded to the need. Vivienne used the term alphabet soup. I think the need for standardization of measurement is pretty apparent. Not least that, you know, in order to hit scale, you need to be able to address, you know, the entire sort of investment universe, who can then compare investments apples for apples. Now they can compare proposed financial returns pretty easily. I mean, let's not talk about the fact that financial accounting only started to really harmonize in the 60s, and still there are different standards you could work to, which can be difficult to navigate. But right now, there is, to my understanding, relatively limited standardization in impact analysis and reporting. What are your thoughts about that? And are there any opportunities or any signs that actual real harmonizing is happening, such that, you know, an investment in America audited by, you know, one of the big auditors could be compared, as I say, apples with apples to an investment in London?
Shall I have a go at that, Vivienne? And I mean, I suppose maybe this is a good chance to be slightly controversial. I'd probably disagree with your premise, if you don't mind saying, Charlie, in that, you know, it would be a bit like me asking you to give me a model to compare whether Cancer Research UK or AIDS UK is having more of an impact, as which is the better charity. I think that it doesn't devalue the impact of investment. To be really clear on what the impact is you're driving, and as I say, we've got a very clear framework to do that, without necessarily that impact being comparable to another investment in another place. I mean, it doesn't take away the need for experts, and we've got, you know, we've had to hire quite heavily within L&G to really guide us through how can we have the most impact and address those qualitative factors. It's really important to be auditable, and as Vivienne and I both said, really going in with a sense of clarity about what you're seeking to achieve. But I still don't get to the point where I buy this kind of the dream scenarios. This is all kind of monetizable and quantifiable. We can reduce it to data, and I can then just look at a spreadsheet to tell me which the right investment is, because what we're talking about here fundamentally is improving people's lives, and that's something that's more valuable than data.
No, I completely agree, and I find the whole sort of notion of monetization just kind of slightly perverse. But I guess, as I say, to hit scale and be able to attract the man on the street to put his pension investments, you know, with you rather than others, I think being able to be really clear and as empirical as possible has got to be helpful, rather than leaving it to kind of subjectivity. And qualitative, of course it's qualitative, we're talking about people's lives, but I think you know, that really needs to be balanced against the need for, you know, easily understandable, easily comparable data.
And I think that is happening. And Pete's talked about the fact that you need to have expert advice to support you in this. So we certainly bring in a level of, I suppose, of standardization to all of our clients. They're all achieving different outcomes, and it's got to be the outcomes that we focus on. You know, historically, there's been a great focus on inputs, how much you are investing, how much time you are making available. But really, as Pete says, it's the change in people's lived experience that has got to be the focus. So that's one aspect. The other aspect is that there are some global standards which are recognized. And, you know, I mentioned earlier the 5 dimensions of impact, which Pete has already referred to. You also have another standardized framework, which is produced by an organization called Impact Frontiers, put together by a large number of contributors. And that creates a sort of, I'll call it a spectrum, I suppose, of delivery, which we call the ABCs. Now, everyone can understand that. So you're either avoiding harm, or you're benefiting stakeholders, or actually contributing to solutions. And across that spectrum, the depth of your impact is greater. So where you are bringing in independent expertise and where you are using a global framework, then you will have that level of standardization. Yes, there could be more. I think in real estate, we're not terribly good at sort of collaborating and sharing on our best ideas, and I think we could try harder, as the report might say. But that's not to say that there aren't methods out there.
Yeah, Charlie, okay. Do you mind if I just add one more thing on this point? Because I do think it's a really important challenge for the real estate industry, which is, you know, for me, where we're getting to in all of this, and you mentioned kind of the man on the street, is, you know, it's someone in Sunderland who's thinking about where they're going to put their pension or their savings. Yeah. And if they can see Legal & General have invested to make a positive impact down the road in Sunderland, which we happen to have, of course I chose that city because it's one we are investing in, then that will encourage them to put their money with L&G, and so it does create a commercial benefit for us, and I'm very proud of that. So for me, yeah, it actually, I don't think they need to see a spreadsheet that tells them whether Legal & General or Aviva are having more impact and intense methodology. It's about, the challenge for us is to really clearly demonstrate and go to Sunderland, find the investments that are making the impact, and then deliver on that. And the delivery is the really key bit as well. You can have all the good intentions in the world. We actually need to change, you know, deliver the change.
Absolutely. No, really interesting. So next question, how best can financial returns be balanced with achieving a social or environmental impact? I've got a bit of a problem with this question because it seems to assume either or. You know, you dial one up and the other one goes down. And I think, yeah, I think many listening today will perhaps assume that that is the case. I know conversations I've had with prospective impact investors who've said, do I get my charity checkbook out or my investor checkbook out? Do you see it like that? Or, and I guess we've already started to allude to that point. Do you think there is a spectrum of impact versus returns with a sort of sweet spot in the middle where you can achieve the adequate return alongside the impact? Pete, I know you've talked about your, you know, in certain investments where you've got quite modest income returns on the scheme, but they match your 40-year pension liabilities, and you can deliver impact alongside that. What are your thoughts on that?
Yeah, so almost always we view this as commercially the right thing to do. I mean, it comes back to that fundamental point I tried to make at the start, where if we're investing to meet society's need, society should, by definition, need the investment we're making and be willing to pay us a future income 10, 20, 30, 40 years. One of the first investments I made in this role was we invested in 4,000 social homes around the UK, including a lot of them in Preston. And you'll be unsurprised to know that throughout the last decade, the need for social housing in Preston has remained remarkably constant. And it's given us that income stream that's just what we need to pay people's pensions. So fundamentally, it does help that I work in an organisation with a very long-term time horizon, and I'm not for a moment wanting to minimise the fact that it is trickier if you need to make investments with a 2 or a 3 year time horizon. This can become more of a conflict. You know, again, just in the spirit of trying to be as collaborative and constructive as possible, we still see this as potentially a dynamic. You know, so for example, we're looking at new housing developments, and we're going to push the developer very hard on some of the sustainability criteria. We do see sometimes the IRR noticeably reduces because we've said this must be EPC A, for example, or we need this to be fossil fuel free. And then we do take that to investment committee in the lines that I've mentioned earlier, said here's the impact, here's the environmental impact. By the way, there's a small IRR reduction because we've insisted on solar panels or SLC pumps or whatever it might be. But you know, again, with a longer term time horizon, you can quickly see you're future proofing the investments by doing that. We've done a lot of research with YouGov that shows people will actually pay more rent and pay more for a capital value for a home with those credentials. Whether you're seeing that right now when you come to do the initial leasing is another question, but again, that time horizon definitely helps. For us, it's a real commercially driven decision, as well as something about having the impact we make.
Awesome. I think we'll talk about that time horizon in a bit when we talk about SMEs. Vivienne,
Charlie,
over to you.
Yeah, can I come in there too? So there's two things, two comments I'd like to make. Real estate has a very sort of special relationship with people because it's all around us. We live in it, we work in it, we have leisure time in it. It's absolutely fundamental. So the chances are, if you are a participant in the built environment in any way, you are already having a social impact because you exist.
Yes.
What you need to try and ensure is that that impact is a positive one as opposed to a negative one. And we can all think of examples of negative built environment, and we now learn from that, and we want to create positive built environment, places that are inclusive, places that do actually improve people's lives as opposed to displacing people's lives. So it's really a way of thinking about delivering in our industry as much as anything else. And the other point I wanted to make was way back in the day when I was at the Crown Estate and I was leading sustainability at the time, we decided to invest in the public realm in Regent Street. Now, I don't know if you remember, but Regent Street was a relatively ordinary street, very grand buildings, a lot of airline shops, and not a lot else. So we decided to invest quite substantially. There was no direct return on investment from investing in the public realm, and in fact, you know, an argument was quite legitimately made that actually surely this is the responsibility of Westminster City Council and not of the private investor of the assets alongside. But actually what we were convinced about was it was the bits between the buildings that actually was going to generate value for the buildings down the line. And I think we now all recognise that. And we're not in a dissimilar place here. And I suppose I did say 2 points, but I have three. So one other point to make just about that long-term position. At some point, you're going to want to exit an investment. Who are you going to exit to, and what is the expectation of the market going to be at the point at which you are exiting? Surely it's better to prepare yourself for that during the course of your interest.
Yeah. I mean, I guess the Crown Estate also are extremely long-term.
Yes, indeed. Some say 1,000 years.
Yes, exactly. It's like slightly dwarfs even energy 40 years. Some really interesting points there, which I think we'll come on to. I think the sort of cultural change that you've alluded to, Vivienne, is something that, yeah, I think we need to drill into, and that point around long-term time horizon and scale, I think, is really critical. And we've got a question about SMEs when we'll interrogate that a little bit more. Next question: what are the main challenges of impact investments, and how can they be overcome? And just before we get into that, I should remind our listeners that we do invite questions. So if there's anything jumping out at you, do pop a question in the box, and we will try and answer it as we go through. So what are the main challenges of impact investments, and how can they be overcome? Questions to you guys: how do you get buy-in from the board and shareholders? How do you get buy-in from the people you're trying to impact? You know, in a residential scheme, you're trying to get residents to lead more sustainable lives, and then complete a survey and say how their lives have been improved. How do you incentivize them? And then maybe we can touch on the changes in the regulatory environment. I know the FCA has released the sustainable disclosure requirements at the end of last year. And then I guess no property conversation would be complete without inviting everybody's favorite bogeyman, planning. And we should, that's obviously a very important part of regulation. We should think about whether there are any opportunities or threats with planning. Vivienne, should I start with you?
Yeah, I suppose to some extent we've touched on, an element of the challenge, which is, that it's not a nice, easy number, so there is an element of problem in the lack of standardization and the mix of language that's used. There's also been I suppose a historic approach to focusing on our inputs as opposed to our outcomes, which I think complicates it. And there is this fiduciary tension, which we've already talked about. And it's not to say that those organisations that we're dealing with at the Good Economy and Pete's experiences, this isn't the world. This is a relatively mature part of a small part of the world. So it's still a relatively small market in the context of investment in its totality. So all of those aspects do present challenges. And then, as you say, board knowledge is absolutely critical in order to get something over the line. But there are drivers, and Pete has referred to the fact that people are increasingly concerned about where their pension is being invested, and they will make a choice about whether or not they want to make some small compromise on their returns if they feel that it is being invested responsibly. So there is an increasing focus on responsible investment, and that's not only coming from the business world, but it's actually being driven by the consumer. So that's very much part of it. I think also we are overcoming that what has been seen as that tension between financial returns and impact delivery. And in fact, Freshfield's solicitors produced a report which essentially encouraged people to be thinking about impact alongside financial returns, because it does create the potential for a more stable longer term investment. So there are a number of drivers. Regulatory is one, and we can come back to that. So you sort of have to balance, well, what have the challenges been, what are the challenges, and then why do we need to bother to be trying to overcome those challenges? Well, it's because there are opportunities. Yes, it is a relatively small market, but it's a growing market. So you're in that market now. You're taking advantage of that as an opportunity. So I certainly think challenges and opportunities.
Absolutely, Pete. How do you get your board to get excited, and how do you get those residents to get excited and committed and involved?
The board is rarely a problem at Legal & General. I have to admit, I'm very fortunate that they tend to be cheering us on. So, and I'm not just saying that. It's one of the reasons I've ended up staying here so long. The residents one is an interesting one. I mean, I'd only add one thing to what Vivienne said, which is, we should never underestimate the skepticism, cynicism, concern, call it what you will, that exists within some quarters of society, and particularly within the public sector, and particularly in the days of when momentum was at its height towards this whole industry. I mean, even someone as august as Vivienne, and certainly someone who works for a financial institution like me is treated with some skepticism when we turn up and say we'd like to have a really positive impact on this sector or this city. And we're, again, very fortunate in that Legal & General's reputation has really grown in this space, and we are welcomed with open arms in many places. But there are still actually times when you invest and are producing something you're absolutely excited about the legacy and the impact of in a city, and there will still be naysayers who are thinking, well, you're in the private sector, so there must be some way you're kind of pulling the wool over our eyes that we just haven't realized yet. So and being equally honest, Charlie, a lot of what we do is working with the public sector, and they have been under-resourced through things like austerity, and so it is a real challenge to drive those investments and those impacts through to completion. And again, fortunately, that's changed over time. So for us, a lot of the challenge around this is actually that kind of helping people realize we are really genuine about this, showing people the track record of where we've delivered elsewhere, and then trying to provide additional resource to help some of our partners like local communities or public sector, local authorities to actually enable the investment to occur. I'm not going to say who, but just to give you one example, I've just come off the phone before this with the chief exec of a major city council who was telling me he was having to write his own cabinet paper because he didn't have anyone else to do it, to try and help an investment to happen that would be incredibly impactful for their city. But the lack of resourcing is such that you've got the chief exec actually having to write papers that will go to the cabinet because there's not enough resources to do that. And it really
we'll talk about some of the questions, some of the lack of resources and skills in a bit. Interesting that the skepticism you referred to. I think some people would just say, I'm not skeptical, I just need to be really, really thorough and interrogate everything. Sure enough, a question from Alexandra. Hi, would you be able to comment on risk-reward profile of impact investing? That sounds like a totally legitimate investment question that any board would ask of an impact investment opportunity. Any thoughts on the risk-reward, the difference between risk-reward for an impact investment relative to a conventional investment? Pete.
So if there's one concept I'd love to leave people with, it's the concept of socially orientated investing. So for me, it's really important we don't fall into the trap of impact investing being one type of risk and return. We went through a phase for a while where people would launch some private equity fund, would be doing lots of other really bad stuff, but would decide they were going to launch an impact investing fund, and it was going to be a 7-year fund, and they were going to make a 12% IRR, and that was their risk return profile. Most of the impact we drive, well, not most, but a significant amount of the positive impact we drive within Legal and General, but there are others who do this as well, so this isn't me advertising L&G, is identifying the right type of capital to meet that need for investment. And sometimes, as I've mentioned, it will be 40-year return, 3% income, and it's a really low risk investment. And actually, we can generate social additionality. We can make more of an impact simply by using a lower risk, lower return type of capital. At other points, I mentioned kind of investing in Kenza heat pumps. Actually, we're investing at quite a high octane, high risk, high return, because those companies really need investment to drive their growth. And that I probably not better go into details, but that's certainly not 3% over 40 years. It's much more punchy. My point is, it's identifying the right capital to meet the need, that socially orientated investment. And I do think it's a de-risking factor when we get that impact right. It can also enhance returns, but it isn't homogeneous.
No, definitely. I think matching the risk appetite of the investor to the investment is, seems pretty core to any investment decision. Next question. What advice would you give to SMEs and local businesses interested in impact investment? I think we've already referred a couple of times to the fact that your focus tends to be on longer term and larger scale strategies that are probably less available to SME developers and businesses. In your experience, what impact investment opportunities are available to these smaller firms? Do you think indeed the term is widely enough understood amongst SMEs? Do they understand, how to go about measuring impact, reporting impact, etc.? I guess finally, where do you think, are you aware of any particular funds which are allocated for SME impact investments? And I'm aware that, for example, Lloyd's have a social impact and loans product. Are there any sort of champions out there that are providing funding for smaller businesses looking to make an impact? Vivienne, should we start with you?
Okay, well, as I've said before, if you're engaged in real estate, you are having an impact on people, whatever size you might be. So just look into yourself to see whether or not that impact is positive or negative, and then ensure that it can be as positive as it can be. Obviously, if you're smaller, you need to be proportionate about you go about it, what your ambitions are, what you aim to achieve, and the way in which you measure what you're doing. So you still need to be measuring it. You still need to be integrating impact considerations into your decision making, but be proportionate about the way you're doing it. So I would say don't be discouraged by the fact that you're not a legal and general, because you can still have an effect. And yes, we are increasingly seeing investment into SMEs, and I think it is a growth market. I'm not sure if I'm permitted to mention any of the names that we are working with, but they certainly exist, and that's reason enough in itself for SMEs to be putting themselves in a position where they can evidence the impact that they're having, because that's what their investors themselves will be looking to be satisfied about.
Okay, Pete, any thoughts on that?
Well, it's worth I would just add, for me and Vivienne's alluded, they have that theory of change. So just taking the time to think through what the purpose of your organisation is, what impact, how could you make a difference in people's lives? And as I say, it could be as simple as the property. If you're a property management business, are you paying your cleaners a sick pay, a proper sick pay? And people like Crown Estate, Legal and General, really do want to try and support this, to do business with companies who are embodying these values and are really clear on their theory of change and how they make an impact. So the more clarity you can have around that, and the less it feels like you're just jumping on an ESG bandwagon, but you've actually really thought through and are passionate about that, the better from us.
Yeah.
Yeah, and I think, Pete, you're absolutely right. So the importance of the supply chain actually supporting the sort of majors in their own objectives is becoming increasingly central. So ensure that you put yourself in a position to attract the sort of instructions that you're looking for, because that will be the expectation.
Good stuff. A couple more questions to get through before the end. How can greater collaboration be achieved to enhance the scale and effectiveness of impact investments? Now, I know you've both talked about coordinating government, local communities and investors in the context of place-based impact investment. And Vivienne, I know TGE published a white paper on that matter. Maybe you can explain how that works. And a wider point I'm really interested in, if you could reflect on that, is the respective capacity of government as opposed to business to achieve social impact. I think most people expect government to focus on social impact, but as Peter alluded to several times, and what you did with Crown Estate, doing what I guess Westminster otherwise would have done, actually business can responsible business can really achieve social impact. So your thoughts on that. Vivienne, should we start with you?
Yeah, well, I'd say it has to be a partnership, and going forward, we're very much looking at collaboration between public and private sector in order to create the improvement in places that we know we need. So that is very much sitting at the heart of the place-based impact investing model. The white paper that the Good Economy published was encouraging local government pension funds to be investing 5% of their portfolio in their locality. And in fact, Greater Manchester Pension Fund was the first actually pension fund to report on the effect of having done that. So there's evidence that this is happening, and it is actually having a real making a real difference to people locally. So the place-based impact investing model is sort of, it's framed around a number of concepts, one of which is that investable asset classes actually overlay very neatly with public policy, whether that is housing or regeneration or clean energy, whatever it might be. So there is actually a natural sort of partnership happening there. And then the other aspect of it is to be investing in a way that actually benefits the place. And of course, if you are investing in that way, then you're actually ultimately benefiting your investment, because you are improving the place. So there's what we call the traits, which are there's these characteristics of place-based impact investing, which are about the place and the asset and understanding local need, which is what Peter's referred to. And after all, that's really just an extension of ensuring that you're investing in a place where there is a market. So it's a supply-demand dynamic, but sort of, taken on steroids, perhaps. So there's that aspect to it. And then there's also the need to really get under the skin of what is happening in a place by engaging locally and really making a commitment to that place. So these are very much the sort of foundations of place-based impact investing. And I think, you know, it has real resonance in real estate, because that's what we do. We invest in places.
Yeah, great stuff. Pete, how do you go about coordinating government, local communities, investors in your projects?
Yeah, I mean, we're seeing some great examples. I mean, I feel like we're just on the nursery slopes of this at the moment, but we're seeing some great examples. And Vivienne's mentioned Greater Manchester Pension Fund, who we announced just before Christmas of joining in our joint venture with Bruntwood SciTech to invest in Manchester and the Northwest knowledge economy. So I'm a big believer in the role of local government pension schemes and other kind of like-minded investors who share the same values and time horizons as us, joining in with the likes of Legal & General and others on this. Yeah, I mean, it's just a lot of this is down to leadership and people, Charlie. I've got to say that's my experience over the years. Is, you know, we've had places where we've kind of shaken the dust off our feet, if you'll excuse the phrase, and kind of realize this isn't going to be the place where we get that collaboration and we're not going to have the impact that we want. And other places where it's just been a really exciting, you know, literally made friends for life, because we're all so proud of the great stuff that we've delivered together in a real collaboration. And so a lot of that does come down to people with that vision and leadership who want to make things happen. And life will always throw up blockers, but there's a lot to be achieved together. Government,
business, where do you think this fits in? And do you think business is really should be taking the lead now to achieve the social impact that government, I guess, traditionally would have been expected to, but can't going forward?
I think both have their roles to play, to be honest, Charlie. And as I said earlier, it is very much a collaboration, and part of the place-based impact investing model that the good economy is running is to create a network of private sector investors and local authorities to be looking at what needs to be contributed in order to unlock the potential of a place. And that potential will have one meaning for a local authority, and it'll have another meaning for an investor. But at the end of the day, it's the outcome and the lived experience of people that benefit.
Yeah, great. Got a question from Niall. I'm in the public sector and in housing, and impact investment seems a really obvious route to harness capital to deliver housing and related infrastructure responsive to place needs. What advice would you give me to help send the message that there is valuable capital to engage with and unlock, and that this is a win-win for the public sector? Pete.
Yeah, thanks, Charlie. I was hoping we'd get onto this one, because it actually comes back to the previous point for me. And I mean, so, you know, fundamentally, let me just be a bit controversial and punchy, and hope this doesn't come out to bite me. The likes of Legal & General have already taken society's money. If you're a local government pension scheme, we already have your money in the tens of millions, if not hundreds of millions, because we're already stewarding it. The question is, what would you like us to invest it back into? And so, you know, now for me, the point for your colleagues would be that they've already taken our pensions. Let's get some of our pension money back into the great things we're doing in our place. The great housing we need, the regeneration we need, whatever the need will be in your place, and you'll probably know it far better than we will. Because the alternative is the likes of a Legal & General or an M&G, you know, just put it on the stock market, and that's not going to deliver great outcomes in your place either. But the money already exists. It's already the public's. I never use the word private sector to refer to us, because actually it is the public's money that's already been entrusted to us. It's about reinvesting back into the public's needs.
Okay, fantastic. Vivienne, I know the next question, I think you've got some stats on. What was the take-up of impact investment in 2023? What are the expectations of for 2024 and beyond? Question to you.
I do have the stats on it, actually, but the 2023 hasn't been wasn't the year it might have been. I mean, not just for impact investing, to be honest, but I think right the way across the real estate industry. So that's not surprising. but all of the evidence is pointing in the right direction for 2024. What I would say is that even where we have sort of dips, market dips, you might see impact investing sort of slow, but you don't see it thrown off course. And I think that's a really encouraging factor for us to bear in mind. So we're certainly on a slow but a very clear sort of upwards trajectory in terms of impact investing.
Yeah.
Okay.
If you don't mind me giving a good example, Charlie, it's become difficult to fund new affordable housing over the course of the last year because gilt rates shot up as in the kind of trustonomics era. But actually, to Vivienne's point, in terms of the income we've received, Legal and General's equity investments, never mind all the debt investments and lending we do, but equity investments of about 7,000 social homes now. And as housing has sadly become more unaffordable for some people, the demand for those homes has only increased. So it's a really good diversifier within a balanced portfolio.
So a question that I think feeds into this actually from Lauren, who is saying, what advice would you give to a young professional looking to enter the impact investment space? Are there any key resources to learn more that you would recommend? And I think reading the place-based investment white paper, there was talk of the shortage of skills and resource. So perhaps you could talk to Lauren about how she could contribute to impact investing and help your various efforts. Vivienne.
Well, yeah, I mean, that there are lots of materials online to reference. Obviously, do refer to the Good Economy's website. We are always putting material up. We publish a lot of thought leadership in this space, so it is a very good resource. I've already mentioned Impact Frontiers. That's an excellent source of knowledge where you're looking to build your expertise. So I would certainly encourage anybody to be looking in those sort of directions, and then watch the market, see what people are doing, see how organisations like L&G and others who are really transparent about the approach that they're taking to creating impact. Look at how that's happening and enter into the conversation.
And Charlie, and just would want to add that it shouldn't be a silo. So whichever role you're in, I mean, it's worth getting a great backing in becoming a surveyor or learning the accountancy exams, doing your investment management certificates, whatever the appropriate qualifications are. Because really, what I'm hoping this will turn into is something where we have lots of different investment professionals all pulling in the same direction and bringing these values and this impact and sense of intentionality into what they're doing. So I suppose my plea would be, please don't think the only thing you could do is join a consultancy or a small impact investing team. Actually, the more white mainstream we can make this, the better. There's some great developers as well, Charlie.
Everyone?
Yeah, we mustn't forget that.
There's some great developers in this space as well out there, Charlie. I'm giving you a free.
Yeah, no, there are. Common Projects are very inspiring people. Yes. We're a fantastic team, very much focused on regeneration and really leading on low carbon strategies as well. And we'd be delighted to work with NMG's funds. I think you're aware, Vivienne, I've already worked with the Good Economy previously. It's a great space to be involved with. Joshua asked a question earlier about the impact on or the effect on impact investment of recent economic headwinds. I think, Vivienne, you referred to that. The trend is generally upwards, and you feel that if there is a sort of cultural change towards not just looking for maximum return, but looking for a balance of return and impact, then I guess even when there is a downturn economically, people are still going to be looking for impact in their investments. Would you agree with that, or do you think really just are saying, you know what, when interest rates are higher for longer, I just want to focus on maximizing my returns? What do you feel, Vivienne?
I would agree with that. I think you know that, and there's a lot of research to support the fact that actually an impactful approach to investing results in a more stable portfolio. So you know there are very clear reasons for doing it, and Peter's talked about what's an important diversifier in a balanced portfolio that impact investing can deliver. So I am only seeing movement in one direction. There's an awful lot of interest, and that really is the precursor to the investment that will flow.
Yeah.
Do you mind if I just add two more angles that are hopefully helpful, Charlie, on this? So we talked about it de-risking. The other one I think is, you know, enables you to genuinely move markets. I mean, we've invested over £1 billion into Cardiff, and local analysts may have expected Cardiff rents or yields to do whatever their forecasts were suggesting, but the investment we've made to meet the need in that city has fundamentally changed the market of that city. And if you get that right, and as Vivienne says, you're really meeting the demand, you will fundamentally generate your own returns because the economy locally actually benefits. And then the second one I think is just really important to mention is there is something about an exponential benefit of getting ahead of the rest of the industry in some of this. So I've mentioned heat pumps, but I could talk about photovoltaic, solar, things like that. Actually, what LNG has been doing is selectively investing in those companies that we expect other people to use as they go on their impact investing journey and driving environmental benefits. And of course, yes, that's about helping those companies to grow their impact, but let's be clear, it's also fundamentally good business for LNG to be investing in growing companies. So trying to really think through that social need can generate that exponential benefit as others catch up and start realizing they can put heat pumps in homes in future.
And you can actually be, and you will be, a catalyzer for investment in a place, because you've had the confidence to go into that place which is underserved, and you've invested, and others will follow as a result of you taking your lead. Which is why it's, you know, the role of Legal & General is just so important to the industry.
Yeah. No, I mean, so as we start to work towards the end of this session, please of course do ping questions if you're eager beavers and desperately trying to get that question out. I guess closing thoughts from you guys. I found it really inspiring to hear Pete and you, Vivienne, talk about the fact that impact investing should impact really should be in every investment, because every investment has an impact, and people should really think about how they do that, even down to the SMEs who, in their own ways, by being deliberate and thoughtful, doing a theory of change, thinking what are the areas that we can help and create an impact, positive impact for the stakeholders in our world, our business. It's very inspiring. Final question from me, really. Can you foresee a world where all investments are seen through an impact lens as well as a financial lens? It'd just be normal. That's what you look at. Pete, start with you.
I could foresee that in the same way as I could foresee a city without crime. But I think it's part of human nature that we will always have bad actors in every industry, and I don't foresee it being universal, sadly. I hope it will be more widespread. If there's one thing I suppose I would like to do away with, it's this concept that this is something to do with the phrase giving back, that somehow our industry is an extractive industry, and then what we're going to do is a little bit of good stuff to give something back, and it's going to be a few, you know, apprenticeships or a visit to the local primary school. Fundamentally, this is about shifting to our mainstream business, investing in communities and improving people's lives, not giving something back after we've taken the majority.
Vivienne.
Yeah, I think that's the reality of it. That there are always going to be those who focus exclusively on their financial returns, whatever the impact, and that's just a fact of life. There will be those, and we are increasingly seeing them, who are looking to integrate a more impactful way of investing, and then there will be those who are wholly committed in terms of the way in which they invest, and you know that's just the nature of people.
Indeed. So look, I'd like to thank our panelists, Pete Gladwell of L&G and Vivienne King of The Good Economy, and indeed RICS for hosting. A reminder, we publish a recording and written summary of this webinar online. Do please feel free to share those with your professional networks. Please take a moment to let us know what you thought of today's session by completing the online poll, which will appear on your screens at the end of this webinar. And I think Danielle will just spin through the next slide showing our future webinars. Very exciting, and the mega trends that we're organizing our webinars around. Very, very many thanks from me for joining. Thank you very much, and until next time, bye-bye.
Bye-bye. Thank you.
Thank you.
Bye-bye.
Thanks, Charlie.